Ladies and gentlemen, good morning or good afternoon, or possibly good evening, depending on when you're joining us from today. Thank you for attending this special webinar where we'll be discussing Donald Trump, President of the United States, and what the markets can expect from the 45th President of the United States. My name is Alex Holmes. I'm Head of Sales and Business Development here at Windsor Brokers, and I'm joined today by our Chief Senior Analyst, Bob, who many of you will be familiar with his daily market reports and updates that are sent to our clients here at Windsor Brokers. Bob, good morning.
Good morning, Alex. Thank you for inviting me to this session. We are going to talk today about a lot of controversies that were around the campaign and final election of Donald Trump, and of course the market reaction on this event. So I don't know, we can start with the campaign itself. As Trump used a lot of different wording that is, I would say, rather unexpected. And if we recall the live debates between Trump and his opponent Hillary Clinton, then we can remember that there were a lot of bad words used in their conversation.
Yes, indeed, Bob. I mean, that's correct. Of course, the markets were taken by surprise. I mean, against all expectations. I mean, the billionaire from New York with no political background, no military background, was sworn in, well, not quite yet sworn in, but he was voted in as the 45th President of the United States. So, I mean, Bob, just to get the ball rolling here, I mean, the burning question, of course, for all investors, will Donald Trump's victory have a strong impact on the world's financial markets? And in which way, Bob?
Definitely, we can expect a strong impact. That already was shown in the past 2 days after he was elected as a president. And of course, more turmoil in the markets could be expected. What is the most important to mention that initial strong fear on uncertainty about situation after Trump, basically during campaign, it was and voting, it was a possibility that Trump may become president of the United States, and thus this triggered strong fears in the market. I would say, from my point of view, that media were also heavily involved in these things, as Donald Trump was not favored by media, and was, if we remember, was called by different names. A lot of affairs were published against him. He is not the person from politics. As you said, he's a businessman, but from the other side, businessman with the high respect, as he built his fortune and his kingdom on his own. While on the other side, Hillary Clinton is a politician who only made her fortune from politics. As we said, Trump comes from completely different background, but it seems at the beginning that he's swimming well in these waters and showing skills that were not expected. Back to these uncertainty and fears on the days before election and night after he first signals were given that he's leading. Panic reaction, if we remember, happened on Wednesday night in the markets, as investors were mainly influenced by the news that were coming during the campaign, and showed their strong fear that triggered the panic reaction in the market in strong sell-off of all riskier assets. US dollar crashed, US stocks and basically global stocks crashed. Strong demand was seen for safe haven instruments, and overall there was, let's call it, roller coaster in the markets during the election night when the results came out.
Yes, thank you, Bob. Indeed, I mean, it was a very volatile 24 hours for all the world's markets. I mean, roller coaster, I think, sums it up nicely. And of course, as you touched on the campaign itself, I mean, it was at times messy, to be polite. I mean, Donald Trump's rhetoric during his campaign has been a major cause for concern for the world's financial markets. I mean, is this likely to change now that he has secured the presidency, do you think, Bob?
Uh, Definitely is going to change, and Trump is going to change his behavior and rhetorics from the base completely. As this wording that was used during campaign was, I would say, used for campaign purposes and have nothing to do with his post now as the U.S. president. Of course, such a behavior does not go with his position now, and I expect him to change completely his behavior and rhetorics, and all what was said during campaign is to be soon forgotten, and this was just used to win the election, and basically he succeeded in this. What I think Trump will move in completely different direction from these, I would say, bad wording that was used, but we have to focus on his points that were written in his program, and I think he's going to stick on this and lead America, I think, in the new era after 8 years of President Obama.
Yes, indeed, Bob. Thank you. Of course, one of the topics that was mentioned during the campaign on a number of occasions was that NATO will need to step up to the plate more, as it was put. And I mean, do you think that with a Trump presidency, we could see NATO's position following the comments that have been made? And I mean, do you see any possibility of this actually occurring? And should it occur, I mean, how do you see this affecting the markets, Bob?
I see this as definitely no answer. NATO is an organization that was formed a long time ago and has its philosophy and purposes, and one person cannot shake it, not to say to impact it stronger. All this, what Trump is back again to what we said already. What he was saying during the campaign is just for campaign purposes. So no stories of weakening NATO. NATO, as he said, that other NATO members should contribute more and America should contribute less. That triggered, if we were following the comments, especially yesterday, that came from UK top military officials saying that if this scenario becomes reality, then we can expect attack of Russia as quite a realistic scenario. Of course, NATO was formed and created and is acting for one purpose, to keep the Western world protected from the Eastern world. Basically, this is the main philosophy now, not to go into more details, but I don't see that such a scenario has any support in the future. As well as comments of weakening NATO, building walls between Mexico and United States, weakening American military power in favor of some economic development. I think these are the stories that should be forgotten. And on contrary, what is base of global domination of United States is to keep these organizations such as NATO in a strong shape that could act at any time, especially in light with the recent tensions between Western and Eastern world over Ukraine, over Syria. These are the burning points, and definitely if NATO weakens according to such a scenario that was mentioned in campaign, that it would be a big hit to the Western world, and expansion of Russia and other countries that are also presenting mega powers could be a quite strong scenario. So I don't think that anything of this could be discussed, not to say it could become a reality. It was just used for campaign purposes and nothing else.
Yes, thank you, Bob. Of course, I mean, here in Europe on Wednesday morning, we woke up and witnessed the reality that Donald Trump had been voted in as the next president. And of course, when we checked the Asian markets, we witnessed, I suppose we could classify it as a flash crash. And of course, there was a sharp recovery during the European and US sessions that followed. Now, of course, during campaigning, Trump was quoted as saying that South Korea and Japan, who of course historically are strong allies with the United States, would kind of had to put their hand in their pocket more, as it were, Bob, and help with the defense of the region as a whole. I mean, how likely is this perhaps to have an effect on Asian markets in particular? I mean, do you feel we might be entering a period where we could be witnessing a bit of a yo-yo bouncing up and down round between markets?
I think that Asian markets are going to be affected strongly. If we take a look at Trump's plan during the campaign, he was pointing basically in economical view, we should expect politics of neoliberal capitalism, which will be strengthening the power of the markets. On the other side, it will be weakening social and any public organizations. And this was basically the main aim of the previous US government. But what is the point that Trump said? What Trump said is that free trading between United States and other countries, in this case we are talking about Asian countries, should be in a way limited and should impose some taxes to protect US economy. As if we take a look at immediate reaction of Asian markets, most of Asian currencies crashed on Wednesday morning after news confirmed that Trump was on a good way to become US president, raising fears that such a politics could have and will definitely have a strong impact on Asian markets, imposing taxes on big US economic partners such as China, Japan, or any country from Asia where United States companies have a strong base, and basically most of the US companies were due to the high taxes United States moved to Asia, will have stronger impact on Asia. In addition, story about interest rate hike by Federal Reserve in December, which was slightly sidelined on Wednesday on raising fears of what will happen after Trump, are again back to focus, and markets are seeing Federal Reserve acting in December, that this is the last chance for them to hike the rates following last December 2015 rate hike and promise of Fed that they will act at least 4 times in 2016. So far this did not happen, but quite likely scenario will be for December 2016 rate hike. Recall the United States were the first among world countries to hike rates after a decade during the strong crisis when most of the, actually not most, all of the world central banks keep the rates at ultra low levels and still show any signs of possible hiking. Now we have some hints from United Kingdom, but this is still I would say on long distance. So both these things, reducing the free trading agreements that existed until now, that will be the first hit for Asian markets. And secondly, in case the America raises interest rates, that is another threat of strong outflow of the capital from Asia towards United States. So we should expect Asian markets to remain under pressure. Of course, we need to see once Trump is officially appointed as the president of the United States, and comes out, his administration comes out with the program, then the picture will be clearer. But so far, I would say yes, there is a strong threat for Asian markets, in particular for stronger pressure on their production and exports, basically, and of course capital outflow due to higher rates in the United States that was widely expected.
That's brilliant, Bob. Thank you very much for that. I mean, Bob. I mean, generally speaking, overall, I mean, of course, time will tell as we go along, and as the dust settles, as it were, we begin to see and understand more exactly what Trump's battle plan is. But I mean, what do you believe we can expect on the political and economical landscape from a Trump presidency?
Again, this is based on Trump's plans from campaign, and as I said, widely expected to be expected is politic of neoliberal capitalism, with the Trump is, as he said, he's going to further strengthen the United States to bring them back to the position of number one mega power in the world. And he is going to be promoting this neoliberal concept of capitalism. He will be most likely going for a further strengthening of globalization processes, and in this case, it's the first thing of agreement about transatlantic cooperation with European Union in the field of trading and investments. And this is a job which was basically started, and it's purely in interest of America rather than the rather than European Union. What I expect is that relationship with the European Union will further strengthen, and on the global level, organizations like G8 and G20 are expected also to gain more strength and more power. And basically, there should not be any significant changes in this. But what to expect is that Trump is likely going to give specific note of individual touch from himself as in leading one such a big country will be something similar to his business that he was doing so far. He was leading the Trump kingdom, and we know where the position he reached. He became multi-billionaire on his own. So this is a career for every respect, and most likely he is going to impose such policies in leading America. Of course, he needs to follow certain rules of the state, but definitely I expect Trump to go for, as he promised in the campaign, to go for further strengthening of America as a country and the world mega power number one, to strengthen the economy, to strengthen the military, the U.S. military, and globalization, as America is likely going to continue to dominate in the world of the world.
Thank you, Bob. I mean, over the last 24 hours or so, we've seen, we've heard a lot of rhetoric, particularly coming from the UK, regarding the special relationship that exists with the United States. And it's obviously, of course, just words, it's speculation, but it's given obviously a bit of encouragement to the cable. We've seen it climb to recent new highs. Of course, investors and our listeners here today, they're of course looking at opportunities that potentially may unfold in the coming weeks. I mean, is this a signal, do you think, that we will likely see volatility based on, statements that are made here and there, and as the mandate of the new president becomes more known to the markets, are we likely to see more volatility? And where do you feel may be areas that traders should be looking at for potential opportunities?
That's excellent question. Thank you, Alex. I was thinking of raising this question. If we take a look at British pound against dollar performance in past 2-3 days and compare it with the ranges of other major currencies, let's say euro dollar and dollar yen, then we can see that range of cable against other two currency pairs is around half. After dollar fell sharply on Wednesday and then started recovering, sterling did not follow this path. Sterling found against dollar found some support, and since then it's moving higher. This morning we witnessed the fresh strength of the US dollar across the board, but at the same time sterling shot to the fresh highs above 126 level, well above 26 against US dollar. This is what is this I think is driven by hopes that special relationships between US and UK will further strengthen during the Trump's presidency. Not to forget that Trump was the one who supported the UK's vote for Brexit in June this year, opposing President Obama and former President Clinton, who were encouraging United Kingdom to stay in the European Union. So the UK sees Trump as a friend and a good ally, and this is one of the factors that support pound. On the other side, also after this crash after Brexit, when the pound significantly fell lower, situation in UK did not. Actually, the movements of pound and generally of economy did not follow the expected path, as most of market participants were seeing pound more lower, as the exiting European Union was also meaning that Britain will lose the single market without taxes, and there are a lot of benefits that come with this agreement and will be on their own. On contrary, quite good results of economic indicators that came recently from June until now gave a good boost to the British pound. And another support came from last week's decision of the England's High Court, who ruled that Parliament needs to give final approval for any action, as we know that government of United Kingdom wanted to trigger so-called Article 50 and start official process of divorce from European Union. There is a still strong opposition. Just to mention that vote for Brexit was 52 against 48%. So we have nearly half of population in United Kingdom still supporting Britain being in staying in European Union. Now this decision from the court, which implies also something that is so far seen as unlikely scenario, but the head of the England High Court, the highest ranked judge, said that the court is the last body, and in the case of any dispute, they can even revoke a decision that was made on referendum. So basically, they can cancel Brexit decision. So this gave boost to the pound. And if we take out this turmoil from after US election, pound is on quite a strong path. A week ago, I was doing some analysis for sterling, and I predicted that it may go up to 128 zone, which marks the previous critical low. This is the low of the first wave after Brexit, and the pound managed to stay above this level for quite some time before this next so-called fast crash that occurred later. But sterling managed to regain some ground, and this is a good base of thinking that something else may develop. Initial signal is that pound is going against all the world currencies on significantly stronger dollar. Against US dollars, pound is significantly higher in early Friday's trading and maintains this move in recent period, while it also hit fresh 6-week high against euro on early Friday, as most of investors, due to uncertainty about US elections, shorted euro against sterling. So to summarize, sterling, yes, is one of the winners of the post-election market movements. Now we'll see where it's going to go. Later on, we are going to take a look in the technical outlook and see what to expect for major world currencies, as well as precious metals and then stocks.
Okay, thank you very much, Bob. And ladies and gentlemen, I hope that's helped give you a bit of an insight into Donald Trump and what the expectations for the world markets may be moving forward. We'd like to thank you for joining today's presentation. I will be leaving you now with Bob, who will be going through some technical analysis, as he's just mentioned. And I hope that you will all be joining us again soon for our next broadcast. Thank you very much. Bob, over to you.
Okay, thank you, Alex. We're going to take a quick look at the technicals for major currency pairs and some stocks and commodities that are quite significant. Let's start about the dollar index, which indicates performance of US dollar against a basket of 6 world major currencies after initial turmoil on after elections results came out on Wednesday. Dollar managed to regain. We have these two long candles from Wednesday and Thursday, and on Thursday the dollar index hit previous high, which was posted on 25th of October at 99.09. Basically fully reversed this pullback that started from 25th of October and bottomed on 4th of this 4th of November, returning to the strong bullish stance and showing scope for further extension higher. From technical point of view, candles like this, which is bullish with very, very long tail, are usually generating strong bullish signal and support technical view for further upside action. Also, quick look at the technicals for dollar index that are in strong bullish setup, moving averages, as well as MACD and RSI, and existing bullish momentum are working in favor of a further advance of US dollar, which will be also driven by fundamentals on new plans and strategies that are expected to be released from Trump's administration. If we take a look at the monthly chart of dollar index, then we can see that persisting strong uptrend, which started sometime in beginning of 2008, is still in play, and the price of dollar index reached the highest since sometime 2003 at 100.38, 135. These are the peaks of 2015 and 2016, and there is a scope seen for a further advance. Another currency pair that could be interesting, actually they are all interesting. Let's take a look at euro against dollar. Euro was initially higher as fears during the campaign of Trump's victory pushed the euro price higher, and then it started moving lower. This is the spike of Wednesday. Again, this very significant candle. In this case, it's bearish red with very long upper shadow, generating strong bearish signal and pressure. That resulted in yesterday and today's candles in red. The euro is going approaching basically strong support at 108.49. This is low 25th of October. So similar to dollar index, just inverse chart, and we can expect it to go further down if we take a look at the larger picture weekly chart, then there is a bigger cycle that started from November 2015. So we are talking about 1 year move that peaked at 116.14 in May 2016. Basically, the recent movements in past couple of months retraced the largest part of this movement, and in case price loses this 108.49 support and the next one 108.20, we can expect it again significantly lower, with the fundamentals working in favor of US dollar, meaning that pressure is on its major counterparts. Now, the sterling is the one that we discussed recently, and this shows strong movements higher. This is the daily chart of British pound against US dollar. We can see strong moves higher. Now we are on the third wave of higher low at 120.81, and if we just apply Fibonacci expansion studies, we can measure where the price could go in case of this scenario extends. So basically the 127 zone is the next level, and then 127.95. I predicted in my last week's comments that it could even extend above this level. 127.95, this is the former critical low. This is post-Brexit move, and then extension down to 127.95 when the price was in this range until beginning of October. So we're talking about a few months, and then final break here on this mini crash, so-called fast crash, extended lower. Now the first signals of building base and the stronger recovery are underway, and we may see pound stronger. Of course, in this case, it's driven by news, but not forget technicals that are also very supportive at the moment. Strong bullish momentum, bullish setup of moving averages 10, 20 and 30 days. Now the price is heading towards 55 days moving average, which is just above 127, and the wave could extend to its Fibonacci 100% expansion at 128.20, which is not far from this 127.95 resistance, and this could be our next strong barrier and target in the short term if this scenario sustains. So far, pound received good support, and is to be expected that further upside could be quite likely for British pound, which moves in the exactly opposite way from the other currencies, major currencies, against significantly stronger dollar. I saw the question about this. I think I just gave an answer to this. One of the members, one of today's listeners. I think yes, it looks good for sterling to extend further. Of course, we have to consider that technicals always give negative signals. In a quick look at the lower time frames studies, we can see that they are overbought on 4-hour chart. Slow stochastic and RSIs are overbought, and we can expect some corrective action. Measuring this latest up leg higher, which started from 123.50, that is post-election base and acting as very strong support. Then we have Fibonacci levels around 125.50, which is also the previous high. Near it is 38.2% retracement, Fibonacci retracement, and this should be acting as quite good support and should ideally contain dips. Of course, stronger dips cannot be ruled out, but according to the current situation and the strong outlook for sterling, I think this could be a good support. Since we don't have any other questions, I would like to conclude today's webinar, which main subject was victory of Donald Trump becoming a new US president and the market reaction. Of course, we are going to follow all developments in the markets and are going to inform you either through our written comments and analysis or another webinar that will be arranged if we see that any stronger movements in the markets are worth to analyze them in depth. Many thanks to all of you for attending today's webinar. I believe and I hope that we provided you with good information in order to make your trading decision. Again, thank you and have a good day.